Hey, you have Patrick Findaro here, co-founder at Vetted Biz. Today, I'm very excited to have on two executives at Real Property Management, a firm that we've had clients with a Visa franchise since 2016. And we've had a lot of Vetted Biz users I see inquiring about Real Property Management, visiting their page. So it's well overdue to do an interview with Dan Glaser, who's the VP of Franchise Development, as well as the president of Real Property Management, Jeff Pepperney. It's a pleasure to have both you guys on.
Thanks for having us. Great to be here.
Yeah, thanks, Patrick. Appreciate it.
And I'd be curious, just for the listeners, like how you two got into the franchise industry. And maybe Jeff, you could start. You had a long career at Sears, and I'm sure developed a lot of their franchise capabilities in the organization. And love to just hear a bit more of your background and what got you into this industry.
Absolutely. Patrick, early career for me, I started in financial services at Deutsche Bank and progressed my career in financial services. And then I met a mentor of mine in Will Powell, and I think mentorship is fantastic, and pulled me into Sears Holding Corporation and worked in home services, right? So went from financial services into home and consumer services. And within Sears had an arm in franchising, right? So most people think about Sears as the retail store, consumer services, home services was enormous, franchising capabilities. And I really thoroughly blossomed and enjoyed the power of franchising and started early in there and grew up through franchising in terms of operating a brand to then leading 5 different brands, and which helped me arrive at what I think is the best franchising company in the world is Neighborly, and then becoming president of Real Property Management.
Well said. I know, Dan, I've interviewed you in the past with another Neighborly brand, but it'd be good for those that didn't listen to our prior interview if you could shed a little background.
Yeah. My way of getting here is a little different than Jeff. I didn't really choose franchising as much as franchising kind of chose me. I came to Waco, Texas, which is the corporate headquarters for Neighborly. This June will be 15 years ago. So I came to Neighborly back when we had 6 or 7 brands back in 2007, and we're up to 17 domestic brands today, over 30 if you include all of our international companies. So I've really seen Neighborly just exploding growth in the last 15 years, and it's been amazing to be part of that growth. So my mentor early on was a gentleman named Doug Dwyer, who is the son of Don Dwyer, who's the founder of the Dwyer Group, now Neighborly. So I got the opportunity to learn franchising from one of the greats in our industry, in my opinion. Spent about 8.5 years with our flood and fire insurance restoration business, Rainbow International Restoration. Spent about 4.5 years with our window cleaning company, Window Genie. And I now work with our 2 real estate brands, Housemaster Home Inspection, which we talked about before, and Real Property Management. So I love Neighborly. I love what we do in a deep way, because it's really all about changing people's lives and entrepreneurship, and just an amazing place to be.
And then for those that aren't as familiar with like the property management industry, it'd be great if you could just break it down a bit. I understand there's vacation rentals, long-term renters, and just love to see how the industry is, if you could explain it, and then also like how RPM fits into that industry.
Yeah, absolutely. So I think, Patrick, when we think about property management, right, our value proposition is we take care of the hassle, you own the home, right? And as we continue to grow at Real Property Management, our target client is the intentional investor. About 70% of our portfolio, we manage over 63,000 properties. Largely that is specific to single family residents. We do multifamily as well. We do some HOA, we do some vacation, we do some commercial, but single family residential, and investors continue to pour extreme capital into the market as a way for them to build wealth. And we become their trusted advisor to manage their property. And we see that really changing the landscape from the used to be the DIYer, right, to early 2000s, mid 2000s during the housing crisis, where some people accidentally became a landlord or an investor, right? To now in today's environment, which is our centerpiece, which is the bullseye of everything we focus on, is the intentional investor, where we're managing their property. When we think about managing the property, I think about three key phases, right? So managing the property, leasing the property, and maintaining the property. So the entire components of everything from getting the home ready and making it presentable to rent, to making sure that we got the right screened and qualified tenants, to making sure that we have the right rental rates, depending on where they're at geographically. And for us, we've awarded in the last 2 years, and you think about the power of property management with real property management, we've awarded 72 new locations just in the last 2 years. So when we think about the explosion of capital coming into the marketplace in terms of real estate investing, they know intentional investors, they know the power of having a property management company. And we see that in terms of our ability to award, as well as our other franchise locations. Now that's 368 in the US in terms of their explosive growth.
Focusing on like the professional asset managers that like have a portfolio of 100 single family homes up to 2,000 plus single family homes, how are you guys competitively positioned? Like, who are you competing with? Are they going to mom and pop? Or are they going to a publicly traded company that would be competing with RPM to manage their portfolio of single family long-term residential properties?
Yeah, I think it's all of the above, right? I mean, largely the mom and pops, I think, are focused on those where I consider that the DIY or the accidental landlord kind of that owns maybe one property and doesn't really either wants to get out of doing that and really looks at from a local mom and pop. And we position ourselves, like I used that word before, we position ourselves as a trusted advisor. And really, we're in the business of helping investors create wealth, right, through managing their property. So from a competitive landscape, we believe we compete on all those fronts and continue to take market share from the mom and pops, as well as some of the national companies that are out there today. Like I said, we see that for the number of locations that we have, as well as the properties that we continue to pick up through adding new market share.
What are some ways that can really hurt the investor's return on investment where you guys can help out? I imagine one is like pricing the rentals at an appropriate rate, filling it really quick so it's not sitting idle for 2 or 3 months. What is like kind of the biggest value where it's like, okay, your expected returns 9%, we're going to try to keep it there and we're not going to have it dip down to 5 or 4%?
Absolutely. And I think it starts with two things, right? So it's positioning the property, right? So making sure that the property can get the best rental rates in a competitive marketplace, right? And by doing that in terms of our consultation, and that may be coming in and placing new flooring or upgrading fixtures, right? So that you can position the home to make sure that you get the best possible rental rates. And I think, Patrick, the second component is qualifying and screening the tenants, right? So we want to have the right tenant fit into the right property. And that continues to flourish for the homeowner who's helping really, again, position that for appreciating the property value, as well as that positive passive cash flow month to month.
Yeah, because if there's tenant churn, like, and the property is vacant for 2 months, I mean, that's going to kill their return. Where if someone's staying in 3, 4, 5 years, I imagine it's nice as a property manager, less work for you, less and more return for the investor, less for them to worry about.
Absolutely. And I think you hit on something else, Patrick. I think that's very important in the space of property management, right? We have two clients, right? Those that own the property, right? The investor of the property, and then the resident or tenant of the property, right? So doing a really good job in terms of screening investors and residents of the property and making sure that it's a good match and they're comfortable, right? We're helping grow wealth for the investor, and we're providing a safe and habitable location for the resident to live in.
And if both are happy, they're going to renew the lease. They're going to keep renewing your project, your property management contract to keep managing the property.
Absolutely. And I think that sets back into the client experience, right? So the client experience with the investor, the property, in terms of how we communicate, how we share, how we help them build wealth. And then the resident and the client experience with the resident, right? Making sure that the move-in goes smoothly, making sure that if there's a maintenance event, right, we're responding in a timely fashion to that maintenance event.
And I imagine like, and I've seen my father managing a few properties and other people that I'm close with managing 2, 3, 4 properties themselves, but time, technology, and for a lot of reasons that you know much more than me, it doesn't really make sense. And I'm most interested in the branding that RPM provides and the technology. How does that allow the franchisees of RPM to really scale up, where they're not a mom and pop managing 10 rentals, but they're managing 100, managing 200 properties?
Yeah, great question. Technology to us, and I think we lead the industry in the technology usage for our franchise owners, right? Because running a business, making sure that they have the right technology stack and how they're going out and leasing the property, right? Because, and thinking about it on the other side of the equation of the property owner or the resident, right? Everyone wants a frictionless experience, right? In how they can actually view the property. So we've got technology that helps our residents view the property in 3D without even going into the property, right? And our communication, our portals that we have with our property owners, right? We're able to transmit to them in terms of how the property is appreciating, how the property is cash flowing, right? So leveraging technology for our franchise owners to efficiently run the business, scale the business, as well as for the homeowner and the resident, and how we're communicating out is critical to the success.
That's well said. And for franchisees that are entering in, I think you mentioned you've awarded 70 plus new locations over the past year, or was it the past couple of years?
Yep, past 2 years.
So, I mean, that's incredible based on that we had a pandemic and we're emerging out of it, but that's a very nice feat. Like most of these franchisees that are starting RPM, do they have experience in the home services industry? What's like the ideal background for franchisees?
Yeah, great question. I see as we look at those 72 locations in the last 2 years, and you hit on it right too, right? We were in a pandemic and we're proud of it, right? We've awarded franchises every single month. We've added new properties to manage every single month during the pandemic. And I think about that ideal candidate, right? I mean, I think it starts with someone who wants to go in for business for themselves, but not by themselves, right? So having a partner. I think the other component, Patrick, is our franchise base loves what they do and they're amazing at what they do, right? So they're validating out to people that are coming in thinking about what's the right business model. And you think about the property management space, I mean, it's a recurring revenue model, right? You hit on that, right? With family, like we're managing property. We work real hard today to bring on a property. Those clients are going to stay with us for years and years. So the recurring revenue model. And then, from a background, we have all walks of background that come to us for franchise owners. C-suite executives come into it, people that are in the real estate space, not in the real estate space, maybe came from trade. So I think to us, they're not necessarily one ideal candidate, but it's those that have the passion for dealing with investors and residents, the passion for the client experience, and the passion to be part of the housing industry that we see that's ever changing today.
And yeah, certain areas like in South Florida, rents have gone up. Like Miami Beach, it's up 30%, and there's really a crunch. So being like a top property manager, you're being that trusted advisor gets that much more elevated. Where it's a tense market for everyone involved, and some investors that are selling their properties and want to cash out, and renters just finding. So I can imagine that you guys really elevate, and it's probably a good time for some of these franchisees to open up.
Absolutely. And I think about our business model too, right? We provide a number of different core services of the right, placing the right resident in terms of leasing and managing the property, collecting rent. But there's also, when I think about the intentional investor, they trust real property management franchise owners, right? Their goal is how do I acquire more properties, right? So it really helps us morph into if when I think about the real estate space, there's three big components, right? We sit in the middle of the holding, right? There's acquisition and there's disposition. So
Yes.
we have a lot of investors that are coming to us talking about is, Patrick, how can I acquire more properties? Right? Because you're doing an amazing job with the 10 or 12 properties that I currently have, right? They're appreciating. We've got the right residents. My cash flow looks great. The home is protected. I love it. And so we're positioned to help them acquire more properties. And we're also then holding that for them, right? As that property continues to appreciate. We have a proprietary tool called the Wealth Optimizer, right? So that really looks at the full scale of your property, talks about cash on cash, appreciation, depreciation, a whole host of components where we sit down with the investors and we talk about here's what it looks like at 5 years, at 10 years, at 30 years, right?
And
so
all the actual true costs, because I've sat down with some real estate brokers in Miami, and it's like they give you some of the numbers, but when you start running everything in Excel, it doesn't look as good as they said.
Absolutely. All the true costs, right? So we could go backwards and take a look at what it's done. We could project that out over increments of time. So, and that helps investors say is, the housing market's hot right now, but looking and forecasting that out, it may not make sense to cash that in today because it is providing positive cash flow. It's
And what are you going to do with that capital? They got to do something with it.
Where do you park that, right? So then the conversation shifts to, Patrick, help me acquire more properties, right? Put that into the engine to help me grow wealth.
And what I like, you don't have as much of an agency issue as like a realtor that might be selling a property where they're out of it. They sold the property, they're out, where you guys stick in. And if you gave bad advice, they're not going to renew with you, and you really need them to renew to be managing their portfolio of properties.
Well said. Very well said.
How on the acquisition side are you guys helping? Are you actually finding properties and acting in like a broker capacity at times?
Yeah, I think part of it starts with our relationship in the local communities, right? So we're piped in with all of the realtors inside of those communities, right? So as people are calling, they're a realtor, right? Which is, hey, I'm looking for more properties to purchase, right? They'll refer them out to RPM Solutions or RPM Express or RPM Alamo, right? So let's get you in touch with your trusted advisor in the property management space to really help understand what are your goals, right? How many properties? What are you looking for to acquire? So a relationship not only in the investor community, but a relationship locally with the realtor community.
And I imagine when a franchisee opens up and say they have 20, 30 properties under management, the organization is going to look a lot different than if they're having 200 properties under management. What's the organization look like when they open up that first year? And then when they're at like, say, 200 properties under management, what's the day-to-day and the organization look like?
Yeah, great question. With scale comes the reinvention of the business model. At Real Property Management, we have 6 stages of the business.
Okay.
It spells Real PM, right? So our new franchise owners come into Rise, right? So that is really could be a partnership, could be a husband and a wife, could be a spouse coming into the business where you don't have properties, right? And so it could take 1 or 2 people to manage that, right? Manage the vendors, manage the investors. And as you grow and scale, you get through our merge group, which is where you start really taking on more properties and you're ready for that first hire or that second hire, right? And then we go to accelerate group, and then we go to our leader group, our prime group, and our max group. And in the max group, we have franchise owners that are managing upwards of 2,500 properties. So they've got teams within teams really in business development, in leasing, in accounting services, in maintenance. So you really see that from the start of no properties to building your book of business and then building your team to be able to support our clients.
And from what I've seen that distinguishes RPM from your competitors is the franchisee community seems super tight, where I know of a franchisee where his first client came from a franchisee in the somewhat nearby area where they kind of were happy with the amount of clients they had and literally gave a client to this new RPM franchisee, which I've never heard of something like that in another franchise system. So
Yeah, you hit on one thing, Patrick, that we are incredibly humbled by and proud of is our franchise owner network, right?
yeah.
So again, we have 368 offices, the passion of those franchise owners. And I tell prospective franchise owners when they're evaluating our model, right? And they're doing their validation calls, the power of our system is the power of the men and women at Real Property Management that own the franchises on how they want to help new offices or large offices, right? In terms of how they network together, because everybody's there they all started at the same point and grew and scaled and want to give back. And we have a lot of different ways to connect together virtually, right? Through our lockdown Facebook forum. We get together every other week in town halls to share information. Those 6 peer groups that I talked about, we bring together, right, and facilitate the ability to have conversations. We meet in person a number of times in the year, and just the excitement of them being together and sharing and collaborating, right, and helping others that may run into a challenge, or everybody celebrating successes that somebody had, reaching their 1,000th door under management or reaching their 10-year milestone with.
Imagine there's like friendly competition too, and people are pushing each other up.
There's great competition, right? There's those that come into franchising together, right? We bring them into cohorts, right? So it's fun to see them 5 years or 10 years after, which is Patrick and I started at the same time, right? And I'm at 700 doors I'm managing now, or I just crossed the $5 million mark. So it's healthy, spirited competition that they have, but ultimately everybody's there to help everybody succeed.
And you see that in the US, especially in our culture where someone's succeeding, it's not, oh, they did something that they shouldn't have done and they got there because of nepotism, whether it's like the guy got there, he worked, followed the system, he did well, he pushed really hard. Like, that's awesome. I want to be like that guy who's killing it.
Absolutely. Absolutely. The thing we do too is we have about a half a dozen different committees between the franchisor and franchisee. We've an innovation committee, a marketing committee, an accounting services committee, right? Where they want to come and participate and say, let me help share, right? For the broader good of the system, right? Even though I'm number one in the client experience, right? Or I'm number one in terms of the doors manager, I'm number one in revenue per unit. Let me help share back to those in the system. So, and I think that there's value there, right? Like they got to the best of the best, but the best wants to be able to share that to help others continue to grow, scale, and succeed.
And they might have some function they do really well at, whether it's business development or on the operations side, and how do they bring in the right employees to kind of complement their strong suits, I imagine.
Yeah, absolutely.
So Jeff, it's really evident like why people stay in the RPM system and how you can really grow with someone that only has 2 units under management to 2,500, and how RPM slots in, and franchisees are really sharing all the information. Dan, like what are some of the biggest reasons someone buys an RPM? Like what do they tell you? Okay, Dan, this is why I decided to buy an RPM, and I didn't want to do my own property management my own property management business, or go with some other property management franchise.
Yeah, great question, Patrick. And a lot of it is what Jeff shared, just the culture and the team and the brand that we've built. There's a lot of brand value out there in the marketplace. But in general, when people are looking at going into business for themselves, it can be daunting to look at, man, there's a lot to figure out, none of which is overly complex. I mean, if you had enough time and enough money and enough energy, you could go out and replicate what we've built in the last 36 years. But when you start adding the sum of all those parts together, all of our new owners come into this and go, hey, I understand business ownership is hard work, because you gotta work hard, you gotta put your effort and energy in, but if I'm going to go work hard building a business, I don't want to go start from scratch and try to figure out, how do I acquire clients? How do I handle marketing? How do I handle lead generation? How do I figure out how to build my management agreement, which services I'm going to offer, how I'm going to price my services, how am I going to handle leasing and rent collection and trust accounting and providing data to my property owners and maintenance coordination. And as I start to build, who do I hire? How do I train those people? How do I compensate those people? What kind of metrics do I need to track and pay attention to and focus on in my business every day, every week, every month, right? I mean, there's a million parts and pieces to this business that when you add some of those together, our owners look at this and go, hey, I don't want to go figure all that out on my own. I want to take a system that's mature, that's been around for decades, that has had time to prove out those systems and refine and perfect and refine and perfect. I just want to take my energy, go back to my local market, learn the system, implement the system, execute the system in my local marketplace, versus start from scratch and try to piecemeal all that together piece by piece by piece on my own.
Yeah, and I imagine with RPM, as is the case with a lot of franchises, is like the time to open is more predictable, the time to break even, and the time to hit the income replacement. Like if you just start a business from scratch, especially if you don't already come from that industry, the time to break even could be 6 months, 2 years, 3 years, where you're kind of shooting darts. Where from talking with RPM franchisees, you should probably have a pretty good idea of how long it's going to take to break even, how many homes you need under management, how do you get to that income replacement level where you were a corporate executive and now you're making the same that you made, but you have an asset that you could eventually sell one day and have a nice liquidity event.
That's right. Yeah, we know exactly. Obviously, rental rates vary in every market. Property values vary in every market, but we know, based on rental rates in your area, how many doors it takes to get to break even based on the average revenue that we're generating per door, what it takes to get to cash flow positive, what it takes to all those different income levels. And that's really how we've broken down those 6 tier groups, is based on gross profit levels in the business. So yeah, we have all the financial metrics mapped out for that. And it gives someone a roadmap to where they don't have to come in and try to throw darts against a wall to see what'll stick. There's a very proven, consistent process that we teach to get their business stood up off the ground, get to break even, get to cash flow, get to where they start making their first hire and their second hire, and really building that out. Because there's been hundreds of franchisees that have gone before them that we've figured this out and built the roadmap as over the years as we built this business. So that's a huge difference, joining a franchise versus trying to go out there and do it on your own.
And have you had any new franchisees or existing franchisees grow inorganically through acquisition, where they buy a portfolio that was managed by a mom and pop property manager in a set area, and instead of starting with 0 properties, or maybe they're at 10 properties, they're able to add on 50 or 100 properties through acquisition?
Go ahead, Jeff.
Yeah, we do. We have real life experience. We have a franchise owner in Houston. We've got a number of franchise owners, but came into this system early on, just as getting ready to celebrate a year with us, and came in early on, started growing organically, and then hit a patch where was able to take on a different portfolio from another company, right? So both from an organic growth perspective and an acquisition. I mean, typically you'll see acquisition as you're longer in the organization, but we're starting to see that morph itself even in some of our newer offices that are just opening up under a year.
Yeah, because it can be a high investment, especially now valuations are a bit high if you're looking to acquire a property management portfolio, or a lot of service industries for that matter. But to be able to have cash flow coming in, and if you already know what you're really doing, you've been with RPM about 3 years, you probably de-risk the transition than if you just open an RPM and you go out and buy a portfolio of 50 homes.
Yeah, and we know not everyone has the stomach for that, or the wherewithal for that, or even the ambition for that. And it's got to be both, right? We're very focused on organic door growth, acquiring clients that way. And those that have the capital and the wherewithal and the stomach and the and the aggressiveness to go do some acquisitions, we've got a very good process in place. We've got people on our operations team that are certified business valuators that can really help franchisees, evaluate local mom and pop companies that they may want to go out and acquire and fold those doors in. So not everyone wants to do that or has the desire to, but those that do, we have a very good team and a process in place to help them.
So Jeff, Dan went through some of the key metrics that franchisees are tracking. I'd be curious to hear from you if there's other ones that franchisees are tracking daily, if not weekly, to empower their business and grow the business in a profitable manner.
Absolutely. I think there's three legs of the stool, right? I think that the first starts with our client experience. And so we think about the word churn, right? So bringing properties on, that client experience, becoming the trusted advisor and retaining those properties, right? So that helps you scale, right? You don't want to be bringing properties in and turning those properties. And sometimes we may not have the right alignment, but ultimately we focus on the client experience. Really, that helps us minimize our churn, right? And we continue to add more doors. That's one. The second one is really our focus point in terms of how we go to market and attract those clients, right? So from an acquisition cost, right? Really, where's your lead development? How's your business development? What's your close rate, et cetera? But I think about the lead development component. That's the second stool. And then the last one, the third leg of that stool really looks at revenue per unit, expense per unit, profit per unit, right? So we can get all the way down to one property and look at the profit per unit of that property. And so that we understand is, because at the end of the day, owning a business, right? You want to grow top line revenue, but you also want to grow in bottom line profit.
Yeah, these aren't like high growth tech companies that have billions of dollars to blow. This is someone that's going to be living off this business.
That's it. So those are really, putting it in a macro level. I think those are the three stools or the three legs of the stool, really looking at our client experience, really from a lead development standpoint. And then ultimately is the effectiveness of the revenue, the expense, and the profit down to the unit level.
Well, Jeff and Dan, any concluding thoughts for someone that might be interested in starting a property management business?
Yeah, I mean, I think this is an amazing industry. Obviously, real estate is just on fire right now. So we have a lot of people that are interested in this space and interested in getting into this business. And a couple of things that Jeff touched on before, this is not a transactional business, right? I mean, a lot of our other neighborly brands are very transactional. We're going to Mr. and Mrs. Jones's house, performing a job. That's great. Those are wonderful businesses, but this is really for someone who wants to build relationships with clients long term and help them build their portfolio of properties and help them build that for wealth, which is why we've created things like the Wealth Optimizer tool and those kind of things. So this is for someone who really has a long-term vision for the business. And it really is something for someone who wants to build something of value ultimately at the end of the day with equity. When you've got 200, 300, 1,000, 2,000 properties that you're managing, when you get ready to retire, have an exit from the business, that is monthly reoccurring revenue that you can take to a buyer and show them, hey, it's not, hey, I have to go find Mr. and Mrs. Jones homeowner to use my service again tomorrow. This is a reoccurring asset that's generating consistent income, helps your buyer get to your valuation much faster. If there's a bank that may be lending on that resale, helps the bank get to the valuation much faster. So there's a lot of upsides to this business, and it's a industry that is where it's headed the next 5 to 10 years. If you look at the lack of affordable housing, how that's driving up rental rates in most metropolitan markets. It's driving down vacancy rates. We've got a long way to go before new construction meets up with any kind of demand where it is right now. So it's an industry that's really exploding and taking off, and it's a great time to be in this business.
And to take a couple other components, because I think Dan hit on a lot of the statistical components that we look at, right? Rental rate growth, vacancy rate decline, recurring revenue model, right? I mean, we're in a dynamic housing industry. And I think positioning the organization, I mean, Real Property Management, a neighborly company, I mean, we're number one in the property management category. As through Entrepreneur Magazine, right? They just ranked out the top franchise in the US. We're 196 of all franchises. I mean, we're number one in the category. And we have 368 locations across North America and a master franchisee in Canada. And I think about where we were for 36 years as a company and the amazing franchise owners that are in our system today, being part of that dynamic housing industry, helping investors create wealth and helping residents who, fun fact, 34% of the US rents, right? So you think about that and that dynamic component of housing. Intentional investors are pouring more and more capital in and see and know the need and value of a property management company. And then a huge rental marketplace where we can help create that safe and habitable location for residents to call their home.
Dan and Jeff, super well said and concluding thoughts, and the whole conversation was great. And I learned a lot, and I hopefully those listening or watching us on our YouTube channel learned a lot about the property management industry and why property management's an attractive business now in 2022 and most likely will be in the coming years. So Dan and Jeff, thanks a lot for being on.
Thanks for having us, Patrick.
Thank you, Patrick.